Hey everyone, today we're going to try and solve a puzzle, the latest US jobs report. Because honestly, it's a real head scratcher. On one hand, you've got some pretty good news, but then you dig a little deeper and you find some numbers that are, well, they're pretty concerning. So let's start putting the pieces together, shall we?
So, if you just glanced at the headlines, you probably thought, hey, things are looking up. The first take, the one everyone heard, was definitely optimistic. And this was the big numbers splashed everywhere. Employers added 130,000 jobs in January of 2026. Now, that was actually stronger than anyone really expected, and on its own, it looks like a really solid way to kick off the new year.
But you know how this goes. With these massive economic reports, the headline number almost never tells the whole story. The really important stuff, the details that change everything, are kind of buried deep in the fine print.
And here it is. This is the conflict right here. You've got that positive number for January, plus 130,000. But in the very same report, the government went back and revised last year's data. And look, these revisions happen all the time. But this was not a small tweak. They literally erased 400,000 jobs that we thought had been created. Just gone. So what we have is one single jobs report that's sending two completely opposite signals at the same time. Let's break down how that's even possible and, more importantly, what it means for all of us.
It really all boils down to this one simple question, right? Is the US economy actually strong, like that January number makes it seem, or is it quietly weakening, which is what those huge revisions are hinting at? Let's dig in and find out.
To really get what's going on, we kind of have to zoom out and look at the bigger picture. We need to put these new numbers into the context of what happened over the entire last year. And wow, this chart really lays it out there. In 2024, the economy added a pretty respectable 1.4 million jobs. But in 2025, after they revised the numbers, that plummeted to just 181,000. That is not just a slowdown, that is like slamming on the brakes.
In fact, one former Fed economist put it really bluntly. They said, quote, "In an economy of 158 million, the 181,000 jobs is basically nothing." I mean, that really puts it into perspective, doesn't it? It shows just how weak last year's job growth actually turned out to be. So what happened? Why the massive slowdown last year? Well, economists are pointing to what's basically a perfect storm of issues. You've got a chaotic policy environment, the economic fallout from things like tariffs and cuts to immigration, plus weaker demand from consumers. All of that just created a ton of uncertainty for employers, and they pulled way back on hiring. Okay, so even within the few jobs that are being created, the story gets even more complicated. To really understand the health of the job market, you got to look at which industries are actually hiring, and just as importantly, which ones are not. And as you can see here, the growth is super concentrated. Pretty much all the new jobs are popping up in just a few specific areas, like healthcare and social assistance. At the same time, other huge sectors like IT and financial services are actually losing jobs. This means if you don't work in one of these very specific growing fields, the job market probably feels a whole lot colder than the headlines are telling you. And just to give you an idea of the scale of the decline in some areas, get this. The federal government alone shed 300,000 workers last year. That is a massive number, and it's a huge drag on the entire labor market. And all of this is happening while our news feeds are flooded with headlines about massive layoffs from huge companies, right? Amazon, UPS, you name it. So let's try to make sense of this recent surge. The numbers are pretty jarring. Corporate layoffs were a staggering 118% higher this past January compared to the same month last year. Yeah, you heard that right, more than double. That's a really clear signal that something big is shifting in the corporate world. So is it time to panic? Well, Professor Harry Holzer gives us some really important context here. He argues that for the tech sector, this is basically a normalization. These companies poured tons of money into AI, hoping to save on labor costs down the road. And now they're adjusting their headcount to try and get a return on that investment. So, where does all this leave us? I mean, with data pulling in two totally different directions, it's probably no surprise that experts have two very different ideas about what happens next. The big debate among economists right now is this. Are we just seeing a normal, healthy, cooling off period for the economy? Just tapping the brakes a little? Or is there something more fundamental, something more structural happening just beneath the surface that we should be worried about? And on the more pessimistic side of that debate, you have people like Fed Governor Chris Waller. He came right out and said that the recent payroll gains, quote, do not remotely look like a healthy labor market. He's basically signaling that he thinks there could be some serious problems under the hood. So what's the expert consensus? Where do they all land? Well, Professor Harry Holzer put it about as candidly as you can. When he was asked, he just said, "We are not sure yet." And that right there just shows you the deep uncertainty that even the top economists are grappling with. And there's this one last hidden factor that's making everything even more complicated: a really big drop-off in immigration. See, that shrinks the number of available workers, which makes it harder for companies to hire. But it also creates a long-term risk of higher inflation, and it might even reduce the country's pool of scientific talent. It's a really huge piece of this whole economic puzzle.
So, we're left with this final and I think really critical question. The economy is, on paper, still adding jobs. But when you look at the kind of jobs, the massive downward revisions, and that recent surge in layoffs, is it actually creating real, widespread security for American workers? That's the puzzle we're all going to be watching unfold.